We all love a good juicy breakout to the upside. So in this video, we're going to be covering 3 of the top breakout patterns, how to spot them so that you can use them in your own trading as you see fit. Now we're going to get right on into it with the first one. But first things first, none of these breakout patterns have to work. These are patterns that we see repetitively across the markets, but by no means is every situation going to be the same. There's different contexts, there's different market conditions, and when that's the case, the results from each specific breakout on a different stock, sector, futures, contract, whatever, can all vary. Number 1, that is going to be my favorite, the bull flag breakout. So what is a bullish flag breakout formation? So essentially what you're looking for in a bullish flag, courtesy here of Investopedia for a second, what you're looking for is a big move up, a consolidation phase, and then a breakout of that consolidation, okay? So when we're identifying this, we are looking for the first 2 components, right? We're gonna look back at examples of showing you how this plays out. But when we are identifying it going forward, and when you're going out in your own trading to identify this on your own charts, whatever you trade, you're looking for this, the first 2 steps, and really being inside that consolidation phase right now. And then when we break out, that is when we have that potential next step of the pattern. And that would be like the completion of the bullish formation, or of course, the bearish flag is the inverse of this. So I take you back on crude oil, back into early September of 2023. And what you're going to see right here is crude oil has a substantial move to the upside. Then crude oil has this period of up and down, up and down, up and down. Now in this period, there was a series of higher lows. So we had the trend to the upside, just kind of continuing to confirm that that price action is pushing higher, the trend's going higher. That's where things are going. Does that mean we're going to continue? Not necessarily, but at least the trend is moving in that direction, right? And so what we then see is this consolidation phase on the 4-hour chart on crude oil. Now you can draw bull flags many different ways. And in this example we can draw this consolidation with a single resistance on the top where we could not break. And then eventually it did and it went higher. Or you can have bull flag patterns, as we'll show you some, that have more of a downtrend to them. Up, push up, more of a consolidation to the downside, and then they break to upside, okay? They can come in many shapes and sizes. Some will call them bullish pennants. Some will call them varying types of bull flags, horizontal bull flags, wide, tight. There's so many different ways to classify them, but the general consensus is that you have a push up called the flagpole, followed by a consolidation or a flag looking formation, and then eventually a break of that consolidation to the upside for the continuation. And that would be a bullish flag completing itself with the move up. Okay, let's talk about another example. For that, we take it over to Home Depot. What do we see on this Home Depot chart? A big push up in late 2021, followed by a consolidation phase, and that is now our flag. So what we see right here is this is the flag. You have our flag pole, we have our flag or our consolidation phase. And that's what you're looking for. Now, what happens next is obviously, right, we've already seen this is what's occurring, but in terms of identifying this going forward on other stocks, other charts, other futures contracts, crypto, Forex, doesn't matter where, you're looking for essentially the same thing. You're looking for these first 2 phases, which is this phase right here, and this is what is not guaranteed. But based on the pattern, based off prior price action, the trend is up. And so a break of that pattern or break of that consolidation could signal the move higher. So again, that's Home Depot from late 2021. Here's an example going back to early 2021. Here's an example on a stock called Generac Holdings, the generator company. What you'll notice is if I zoom this chart back, and honestly, I can probably pull this up to a weekly chart to get even a better view. So from more of like a swing trading perspective, if you will, what you're going to notice on Generac is that Generac had a very interesting consolidation before the next leg higher. So take a look at Generac, very big move up right here, 3 weeks in a row. Call that your flagpole. Then what we had on Generac was a period where it pulled back and consolidated. Now, did it pull back for the entirety of the move up? No. So you have your flagpole right here. Okay. We had this consolidation for quite a number of weeks. And then eventually that consolidation was a downtrend, it broke to the upside. That's another example right there of a bull flag. So you can see how they come in varying shapes and sizes, and you can even see smaller versions of that going back on the Generac chart, right? If you were to look back over the past, couple of months prior to that bigger one that we're looking at, which is right here, right? You see that it happens multiple times. And again, slightly different looks each time, but what's consistent is big move up, consolidation phase, and then a break of that consolidation. And the exact same thing can occur on the opposite side. Big move down, consolidation phase, look for the break of consolidation to the downside to complete what is called a bear flag. Break down instead of break out. Now, before we get into number 2, I want to thank the sponsor of today's video, Iron Beam.
Introducing Iron Beam, a bright choice for futures trading. Iron Beam is an industry-leading broker catering to traders worldwide. With 24-hour live support and the free Iron Beam platform, you can trade the most popular and liquid future contracts anywhere and from any device. With day trade margins as low as $50 and no account minimums, futures trading is more accessible than ever. Register now and let us help you shine a light on futures trading. Iron Beam.
Number 2, the inverse head and shoulders pattern. Now, this is a bullish reversal or breakout pattern, if you will, and we're going to dive right on into it. So the first option or the first example that I want to show you is on the S&P 500 weekly chart. You can look at a daily chart. It's going to look very similar. So if I take it back, what is an inverse head and shoulders? So if you look at me right now, you can kind of see that I have a head right in the middle and I have 2 shoulders. And if I shrug up, you can kind of see the shoulders stick out a bit more and the head sticks out the most. So a head and shoulders pattern would be something like this: a little bump, a bigger bump for the head, and then a little bump on the right side. And now we have a reversal to the downside if we were to break what is called the neckline. That is the completion of a head and shoulders. But again, we are looking for an inverse head and shoulders, so we want the opposite of that, which if you were to scroll to the right here, the inverse head and shoulders would be something like this, and then something like this, and then breaking this neckline right here for a potential move up, okay? And now the neckline is what kind of becomes a bit more difficult to decipher, but the biggest takeaway is understanding the inverse head and shoulders and spotting that. Now, it can look different on a different chart, and I'll show you 2 examples and show you how it looks a bit different. So here's SPY, the S&P 500 ETF, and what you'll notice is that in 2022, the bear market of 2022, SPY ends up coming down, rounding itself back up, and then eventually pushing on up to the upside in early 2020 or into mid 2023. But what you notice is that it has a big move down. What do we see right there? Okay, big dip, deeper dip. Then what happens next? Not as far. So what you see is a lower low, a low, and then a lower low is made by the first 2. And then the third low is actually a higher low, which shows buyers maybe stepping in, price action at least holding up better. We're not continuing to drop lower, lower, lower. We've got a higher low, and that could signal reversal. In this case, our neckline ends up coming somewhere up into here. It's not the easiest to draw because we did have this little upper pop right here, which was a bear market rally. Those can get pretty aggressive when you're looking at these inverse head and shoulders, but you'll notice that we had a lot of resistance either way around the 410 level, and then once we broke over 410, very nice rally to the upside on the S&P 500. So the biggest takeaway here for the inverse head and shoulders is you are looking for a series of lower lows that are then met by a higher low. So we need a push to the downside, a downtrend, okay? And then we need a higher low to the right, which then we can draw in that inverse head and shoulders, boom, to the upside. Now, this one, we don't have necessarily the shoulders at the same height. Like here's one shoulder down here, the other shoulder can be drawn here. So it's a little bit higher, so it's a little bit off. It's like someone that looks like this, which is, again, perfectly normal. That's how the market's not going to be perfect every single time. If you get a perfect head and shoulders or inverse head and shoulders, it's honestly quite rare. The idea is to identify the general pattern, not necessarily it needs to be textbook, needs to look perfect, okay? Here's QQQ, same time span. What we see on QQQ is this low right here. We go lower here. Okay, so no head and shoulder, no inverse head and shoulders yet. And then we have this higher low. A couple of weeks that come down and build a higher low right here. Now, in this case, our shoulders look, again, a little bit off. One of them is deeper than the other, but the same idea applies, is that you have a trend down with a low established. We go lower than that low, and then time goes on, and we have a higher low here, showing strength, showing potential reversal, and then eventually we push much higher, and QQQ went way, way higher, and that was an incredible reversal for that inverse head and shoulders. So that's another example of like seeing the shoulder here, seeing the inverse head, and seeing the other shoulder. Still works, still looks good. It still ends up becoming an inverse head and shoulders when we look back at it, but we're trying to identify this ahead of time. And so looking for something along these lines is what you'd want to look for when trying to find an inverse head and shoulders pattern that can be seen as a bullish reversal pattern. Now, number 3 is the 3-bar play. This one I really love when it comes to shorter term trades, but this is something that may be a little bit more difficult to spot. That's why we have it at number 3, but it's very, very powerful when identified and when seen in the markets. So check this out. We're talking about a 3-bar play, and there's actually multiple ways people can classify a 3-bar play. But we're looking for a 3-bar play that's a breakout pattern or a continuation to the upside pattern. So I'm going to take it back to Netflix back in October of 2022. So Netflix ends up bottoming out in the late spring and summer of 2022, and it starts to push higher. When looking for this setup, we are not looking for a bottom. We're looking for some sort of move higher prior to the setup. So we don't want to find this setup in a stock that's been trending down for weeks, and months. We want to see the stock has reversed a bit. Maybe there was an inverse head and shoulders. It's starting to make a move up. Now we're looking to maybe identify a 3-bar play inside of the inverse head and shoulders, or I guess outside after the inverse head and shoulders has played out and the stock is now reversing back to the upside. So let's get into it. So here's Netflix, and we actually had earnings, and many times you'll get catalysts like an earnings report that is what starts to really propel a stock higher, and then you're looking at Netflix post earnings to see if it's going to continue the momentum higher. And that's kind of what we had in this example going back. So with a 3-bar play, what we're looking for, I'll draw it on the left-hand side, is a bar, something like this, a second bar, and then eventually a break to the upside on the 3rd bar. So you can almost call this, and it honestly does look like a bull flag if you bring the time, if you zoom the time frames in, but this can be viewed on any time frame as well. So we're looking at a 1 year, 1 day. If you were to go to like a 1 hour chart or a 30-minute chart or even a 5-minute chart, you might see more of a bull flag setup inside of some of these moves. It just depends upon what time frame you're specifically looking at. But in this case, right, what we see on Netflix is we kind of have this 3-bar play setting up almost twice, if you will. And we have a big move up, and we can call one here with this candle right here. We have this candle right here, and then the next candle breaks to the upside. Now, what we're looking for is the second candle is an inside bar. So price action stays inside the prior candle's range. So we have an upper wick. I don't love the upper wicks. I'd like it to close stronger, which is why there's actually a better example right after this. But we have an upper wick right here. So you have this big candle right here. The next candle, we have a pullback. It's a red candle, but it stays inside of the prior one. And then if we break on the next candle, the break of the first candle's high is what propels the breakout, and then boom, nice breakout to the upside. We actually see it happen back to back on Netflix. If we were to zoom in again, what do we see? Well, then we have this big candle. Its high is right here. The next candle is a pullback, but the pullback stays strong. Ideally, what you'd want to see is that that candle stays up in the top half. So it does not pull back more than halfway down the first candle. And again, this is the inverse on the downside. And then the next candle was a break of that and a push higher, and this wick went higher. And so that's what you're looking for on a 3-bar play. Okay, I'll draw it again out here. Candlestick, the next candle staying inside, does not break the highs of the first candle. Ideally, it stays strong, as in the top half. It doesn't fall below the halfway point of the first green candle. And then the next candlestick breaks it to the upside, and we go higher. And that would be a 3-bar play, or a 3-bar play breakout to the upside. And that's just showing you We are staying strong, boom, break the highs and go. Another example, go to Affirm, AFRM, and take a look at this stock back in August of 2023. We had an earnings report, which seemed to be the catalyst to extend the stock higher. We had a very nice green candlestick. Then we had this candle, which stayed strong, stayed up in the top third of that candle, but didn't break the highs. Did not break. This red candle right here did not break above the high of the prior wick. The next candle breaks it. Boom, 3-bar play to the upside, breakout. And that right there is the 3-bar play, breakout to the upside. So again, going back, we are looking, these are all examples of charts and stocks that have had successful continuations, but not every situation is going to be like this, A. And B, what we're looking to identify in the future is the first 2 steps, essentially, of all of these, of each of these 3 breakout chart patterns. We identify the first 2 steps, and then if we get the break on the 3rd step, that is where we have the potential for continuation or for a fulfillment of the bullish pattern. So hopefully this was helpful. Leave any comments, thoughts down below. Check out the sponsor of today's video, Iron Beam, and let me know if you want more videos like this. We can talk about breakdown patterns, other breakout patterns. I'd be happy to talk more about them because I do love a good chart pattern. Thanks so much. We'll see you guys in the next video. Peace.